All right, guys, Tuesday, October the 8th. Couple things. We opened up, gap open lower, didn't make an attempt to go higher. It was a lookout below. The right side was the downside. Now, there's always going to be a pop, generally, even in a trend type lower day. But you got to remember, at this point, when you're trading at 98, which we were 10 minutes before 10 o'clock Central, we were 40 handles below yesterday's close. So you got that rubber band really stretched. You can't just think, sell it and relax. I could, you got to know where you're at on the map. So in this particular case, you got to watch ancillaries for a moment that they might pull us up. When I say ancillaries, in this case, Dave in the room in real time looked at the Russell. And when we say look at the Russell, I'll show you a chart of the Russell. Look at the right side of this chart. The first thing they do is jump out of this box and rally. All right, that's important to know, even if you never traded the Russell. Next thing the Russell does is come back a little bit, rotate down, and then jumps again right here. It's another nice pop. So you have to recognize you might have a leader and a follower. They might go up together, but there's more validity to a low being in. You tie those relationships with selling that comes in, and it can't go down. Selling was coming in here. They pop above it. They get below this buying. But this selling right in here at even, if you breach above it, there is a chance that you just fly higher because you got selling coming in here and selling coming in here, selling coming in here, all in the one tick area in the ES. And when you start to get above it, and then you see an ancillary starting to rally as much as the Russell does, all you were able to do was take two things, order flow and intermarket correlations, and continue to find the area that you will trade better because your recognition will be better. Therefore, your probabilities are higher. All right, trading isn't easy, but it's easier than most people approach it because they usually learn the wrong things first. It's not their fault. It's not your fault. Just the way it goes. Don't get away from the skill set you use as a consumer to value price just because you open up a trading account. It's still a price. It still has buyers and sellers that influence it, which is order flow, and it still has comparing and contrasting that values it, which is intermarket correlations. I always urge people, do an internet search on intermarket correlations for day trading or short-term trading. You won't find anything. You want to learn what nobody's teaching. Order flow is a lot of people teaching it. It's still important, but most people who teach it don't understand it. And what I also urge people to do is stop looking for the right answers, start looking for the right questions. That's what I tell my kids. The right answer is easier when you start looking and finding the right questions. Because generally, if you just look for answers, you start asking questions that give you answers, but they weren't the right question to begin with. So what use is the answer? Start asking the right question. Buying comes in, do we go up? No. Okay, we might go down. Selling comes in, do we go down? No, we might go up, like you've seen in here. The house down the street sold 3 months ago for $10,000 less. Another one down the street sold for $20,000 less 8 months ago. All of a sudden, the appraiser is going to start thinking that the price a buyer and seller agreed on is too high. That's when a market, just because a buyer and seller agree in this yellow box, doesn't mean it's a fair price. Think about houses. Appraiser comes in and says, nope, house is worth down in here. Buyer and seller, a seller comes in and says, well, what do you mean? We agreed at $400,000. All right, find a bank that'll finance it at $400,000 because it's only worth $350, and here's why. So if you're not comparing and contrasting correlated markets, inverted correlated markets, then you're not doing your job to predict the when markets are going to do what they're going to do. Short time frame, medium, long, investing, whatever. And the other thing that I'm going to talk about real quick is I'm searching around to unmute my mic, and Dave's on the mic, and he says, hey, that's a little bullish. And it was this comment right here from the China Global Times that came across at 9:55 that helped run us up that second leg. What was that? Well, that's a relief rally that they said China's trade delegation signaled that China is sincerely looking to reach a comprehensive deal with China. That's a reactionary type trade. Reactionary, what do you mean? Reactionary, well, that's bullish, and there's no thinking about it. Well, is that bullish, bearish? What does that mean? Who said it? By that time, you're all the way up here. It rallied from here to here. This was buyable, even though that's not a word. And I think I actually think the example I just gave was in this area. I meant to say it in this area, but the same thing happened in here. Russell led it. We got through some selling, and the news pushed us up. But since I'm here, this was at 935. That's when this bottom was called. And I'm gonna let's look at it, because same thing happened. And see this selling over here? You had some selling, you had some selling, you had some selling, you had some selling, right? That area gets breached. You could often accurately assume that thing, you get through this consolidation box and they get through this selling and this selling, this selling, this selling, it's going to squeeze and make the shorts feel like or look like they got grapefruit eyes. If you're short and price starts to rally above where a lot of people are short from, they get nervous. What are shorts? Buyers or sellers? Shorts are buyers. Shorts are nervous. Chances are we're going to go up. You got all these anxious buyers. That's what creates a market's price to go up. Don't let anybody tell you different. Now, in that same sequence, we had the Russell that started to spin up out of the hole right in here. 935 Central. A jump there, and then another jump there. It's not always the Russell. Could be the Dow. Could be the NASDAQ. You got a few that you can watch, and don't think that you can't look and absorb more than you can. If you drive an automobile, you're absorbing a whole hell of amount of more data than you ever thought you could. So keep your eye on other stuff. Start asking the right question to understand order flow. Find good correlations. Have your level of awareness expand. Make sure you got your blind spots covered, like when you're driving. And I don't know how much it'll help you, but it won't hurt you. It could only help you. You got to work on your awareness, and don't limit yourself in how much you could absorb. Always more than you think. Always. Plus, you don't have to use all the data. You react to it, but you understand it and you know it. I'm not using the data that someone is not in my blind spot every time nobody's in my blind spot. I'm using it when the goof in front of me slams on his brakes and I know a millisecond ago I just checked my blind spot, no one's there, and I could scoot over. Not 10 seconds or 30 seconds ago, nobody was in my blind spot. That could have changed. But I know my awareness. I know who's behind me, who's next to me. I could scoot over. If I don't know that, then I'm taking a chance scooting over, and maybe I just slam on my brakes or hit the guy. Then back up and run away. No, I don't do that. You got to have a good level of awareness. If you don't, you're in trouble on the road and you're in trouble in the market.